I am sure many of you are wondering why I am showing my daily routine video when on the thumbnail I mentioned that I am going to reveal one of the biggest trading secret, and here I am showing what I do from morning to evening. Don't worry, in some time you will come to know why I shown that video. In some time you will come to know what is the purpose behind showing my daily routine video. So before I give you the reason, let me start what is this concept of today's video is all about. Just imagine if I tell you that Adani Enterprises stock stayed bullish from 29th March till 31st March for last 10 years. Yes, for last 10 years, if you go to Adani Enterprises stocks and see opening of the March 29th candle and closing of the March 31st candle for the last 10 years, every time it stayed bullish. Don't you think that it's a amazing information being a trader? So that means if somebody bought opening of the Adani Enterprises on March 29th from 2015 and closing the trade on March 31st, that means holding only for 3 days, would have been profitable strategy. Last 10 years, every time it would have given profit. Don't you think that it's an amazing information being a trader if you know exactly when the stock had stayed bullish or bearish? If you don't believe me, then let me show you Adani Enterprises stocks and you yourself going to see that. And you can see that I made a table here. After that, I'll show you the chart. You can see that year 2015 here, and I said 29th March to 31st March. That is the 29th March open, 31st March close, right? But you know that there are many Saturday, Sundays comes in between, right? Sometimes holidays comes in between. So that means sometime there can be Saturday, Sunday or holidays during this period. So then what we'll do? Then we will take 1 day prior or 1 day after. So that is what you can see that I said 29th March, but here I have taken 30th March. You can see that here I have taken 28th March. You can see that here I have taken 30th March. Sometimes I have taken 29 to 31st, but sometimes I have taken 1 day here or there. For example, you can see that here I have taken 2nd April, here I have taken 1st April. Why? Because 31st March and 1st April must have been Saturday, Sunday. That's why I had to take next day. Okay. So when we do the back testing, that is how we do it. That means if Saturday, Sunday falls in between, we'll take 1 day prior or 1 day after. There are Saturday, Sunday, both comes in between. Then we take Monday or we take Friday, like that. Okay. Don't get confused. Okay. Now let us see this table. You can see that from 2015 till 2024, Adani Enterprises stayed bullish. Now let's go to the chart. You can see that this is 30th to 31st because 29th, I think 29th was a Sunday. Open price here, beginning of the cycle, close price here, it was bullish, right? Where box begins, that is the beginning of the cycle. Where box ends, that is the close of the cycle. So that means you have to see the candlestick open where this box started and where this box ended. This is the year 2015. Next is year 2016. You can see that this is the open and this is the close. This is the 29th March open, 31st March close. It worked and gave a bullish move. 2017, you can see that here also, this is the open, this is the close, and it worked. Next is 2018. You can see that here also the open of the candle, and where is the close? Close. So can you see that close is higher than open? That means it is bullish. And here we have taken 28th March to 2nd April. Why? Maybe there were holidays in between. That's why we have taken 1 day prior or 1 day after. Here 29th March to 1st April 2019. This is the open price. This is the closing price of the second candle and that green candle, and it worked. 2020, what happened? 2020 also you can see that this is the open, this is the close, and it worked. Next we'll say 2021. 2021 you can see that this is the open, this is the close. Close price is higher than open. That means it worked. 2022 you can see that this candle open and this candle close. It's a bullish. It worked in 2022 and 2023. You can see that this is the open of the candle. This is the close of the candle. From the beginning to close cycle, it was a bullish. And in 2024, that this year, this is the open, this is the close, and it worked. So can you see that how nicely annual cycle can remember its cycle and it can keep repeating? Now let me show you one more example, this time for the longer duration. Earlier we have seen Adani Enterprises only for 3 days. Now we will see something for the longer duration. That means almost for 1 month. What if I tell you that TVS Motors stock stayed bullish from 6th October to 5th November 9 times out of last 10 years. So that means from 2014 to 2023 on this specific period, that is from 6th October to 5th November. 9 out of 10 years. In the long-term annual cycle also same thing. If I set 6th October to 5th November, if 6th October falls on Sunday, then we'll take 7th October. Okay. Or if 6th October is Saturday, 7th October Sunday, then we'll take 8th October. You can see that 2018, we have taken 8th October as the beginning because maybe it was Saturday, Sunday, 6th and 7th. So that is what I discussed earlier for Adani Enterprises also. Same thing. When you do the time cycle, you have to consider this if Saturday, Sunday falls. So here you can see that 2014 till 2023, except 1 year, that is 2020, every year from 6th October to 5th November, TVS Motors made a bullish price action. Now you can see that this is the TVS Motors, 7th October, the box what you see here, that is the beginning of the cycle, and where box ends, that is the end of the cycle. The candle which at the beginning of the box, that you have to take the open price, and where box is ending and the candle close at the end of the box, that you have to take the price. So that means here to here, it was a bullish in 2014. 2015 also you can see that it was bullish. It was a big movement. 2016 also you can see that TVS Motors stayed bullish. This is 2017. Again TVS Motors stayed bullish. 2018 stayed bullish. 2019 it stayed bullish. 2020 it was a flat, right? So you have seen that every time from the open, finally it started going up at the end of the cycle. But here you can see that instead of going up, it started going down. Then again, few days before the end of the cycle, it started going up and it closed here. Open price and the close price at the same price mean it is flat, right? So that means in 2020, it didn't work. It did not stay bullish. What about 2021? Again, it started working. 2022 again started working, and 2023 also it started working. 2024 I don't have because I recorded in the June, and this year we have to see what happens from 6th October to 6th November in TVS Motor, whether the cycle continues or it stops. Now you must be wondering that I shown you two examples, both are bullish. What about the bearish? Is any stocks made bearish structure on specific days of the year historically? Yes, there are stocks which made bullish patterns on specific dates of the year. There are also stocks which made bearish. One of the example is Sun Pharma. Sun Pharma stocks stayed bearish from 12th April to 12th May, 8 out of last 10 years. That means from 2015 to 2024, that is in 10 years, 8 out of 10 times it stayed bearish. Sun Pharma, we said 12th April to 12th May, 8 years out of 10 years, it stayed bearish. For example, you can see that 2015 till 2024, that is 10 years period, once it was flat, once it was bullish. That means here it didn't work, right? It did not stay bearish, rather it stayed bullish. Otherwise, 8 times it stayed bearish. So you can see that here, Sun Pharma, 13th April to 12th May, it was bearish in 2015. 2016 also not a big move, but still it was a bearish, because if you look at the beginning of the cycle open price and end of the cycle close price, it is bearish. 2017 also it is bearish. 2018 also it is bearish. 2019 also it is bearish, but 2020 didn't work. It was flat. And 2021 it totally went in the opposite direction, right? As per the cycle, price should have gone down, but price started going up. Here you can see that 2022 Sun Pharma worked, that means it stayed bearish. 2023 also it stayed bearish, and 2024 also it stayed bearish. Now don't you think that it's an amazing information being a trader if you know the stocks which are likely to stay bullish or bearish during specific period of time based on historical data. So what I mean to say that, for example, you are a swing trader and you know the stock came near to some important support. Maybe XYZ stock, there is a strong support at 200 rupees and that stock came near 200 rupees and it is making a bullish pin bar. Now you know that it is making a bullish pin bar, it is near the support. there is a chances of price rising from that level and you think about going long. But same time you also know that support doesn't work every time, right? Sometimes it comes to the support, it can start looking like a bullish, then breaks the support, it can break the support and again it can start going down. Now you are in two minds, you are confused. Should I take a long trade near the support or should I wait for the breakdown on the downside so that I can go short? You are confused what to do, right? But having this information, that means you already have the price information, right? Price information you have that there is a strong support. Now you have this time information, that means that XYZ stocks stayed bullish historically during that specific period of time. Now you have two information with you. One is price information, another is time information. That means you know the support resistance, you already know the price action. Along with that you have one more information, that is the time information. Okay, for a moment look at this chart. This is the Nifty chart. Every time when you see the chart, you can see that there are two scales on your chart. One scale is called price scale and another scale is called time scale, right? This is the price scale and bottom of the chart is called time scale. So all these days what was happening, for example, look at this, for example, this Nifty chart. You know that Nifty is falling from here. Where is the support for Nifty? For that we have to go to left of the Nifty, right? Here you can see that this is the place where is a strong support because of the big bounce from here, right? So we know that this is a strong support. But in trading, you know that every time doesn't work, right? Support and resistance, sometimes it can work and it can bounce, but sometimes what can happen, instead of bouncing from that level, it immediately can break and it can make a big red candle, right? So sometimes support resistance can work nicely, that from the support it can again bounce like what happened here, but sometimes it can break and it can go down also. So when you know that there is a support on the price scale, there is a support on the price scale and the date is somewhere April 17th or April 18th, if you knew that Nifty historically stayed bullish around April 17th to April 18th for next 15 days. I'm just giving you an example. If you have that information with you, that means you have a two information. You have a information based on price scale because there is a support, but same time scale also one information that historically maybe out of last 10 years, 8 or 9 times when Nifty had a bullish structure from April 17th or April 18th till maybe next 15 days or 20 days, then you have a edge on your side, right? You have a two information, that is the you have the price information and you have the time information. That is what all these days you know that we were ignoring this scale, right? We are only focusing on the price scale. We are only focusing where is the resistance, okay, this is the resistance, where is the support, okay, this is the support. So we were only following the price. Now we will start following the time scale also. Don't you think that it can give you better edge in trading when you have both the information on your side? And that is what the new system I'm going to reveal in today's video. I'm sure some of the trader must have already got a hint what is that new system is all about. If you still don't know what is the system I'm going to discuss, that is new system I'm launching after being in market for almost 21 years. After being a full-time trader for last 5 years, I am introducing one of the most powerful trading system which was always hidden from the retail traders. Almost 99% of traders don't know about this system. It is assumed that only 1% of traders know this secret, and that secret is time cycle trading based on annual cycle. Remember, this video is going to be the very long video. That's why I am planning to do this video in the two parts. So that means in this first part, I am going to discuss about the basics of time cycle, what is the time cycle, some examples of time cycle, everything I am going to discuss. And in the second part, which may be after 1 week, there I am going to discuss about the strategies for the time cycle. And the most important part of time cycle is the back testing report, because there are thousands of stocks in the market, right? Mid cap, small cap, penny stocks and large cap, everything. And there are F&O stocks around 160, 165. There are F&O stocks. Do you think that it is possible that you can do the back testing for all thousands of stocks, which date it stayed bullish or bearish based on last 10 years data? It's not possible to make thousands of stocks, right? But selected stocks you can do it. So that's what I've done it. I've done the back testing on F&O stocks. That means almost 160, 165 stocks F&O which are there currently. I have done the back testing for last 10 years. That is what I mentioned in social media platform, that after spending sleepless nights of last 6 to 8 months, I have developed this system. That means doing the manual backtesting every stock to see last 10 years which specific dates or which specific period is stayed bullish or bearish. Doing that for almost 160, 165 stocks, you know that how much time I would have spent, right? And I have done it. So if you want me to discuss that backtesting report, that is the most important, because in the backtesting it will show you that this stock stayed bullish during that period. So when those specific period comes, suppose XYZ stocks from October 15 to November 15th it stayed bullish, then somewhere near to October 15th, and you go and see that chart, and on the price action also it is showing you bullishness, and annual cycle also saying that it stayed bullish. That means you have a high probability system, right? So that is why backtesting annual report is very important. And how I done the manual backtesting, how you can do it, and that is what I am going to show you in the second part of video, which will be after 1 week. So in this week we will start with the basics, we will see some examples, everything. So now let's go to my laptop and let us start with this presentation on revealing the new trading system, that is time cycle trading based on annual cycle. So now let us see what is the time cycle in stock market trading. It is believed that everything under the universe is governed by cycle that are repeatable in nature. So what is the cycle? In simple word, if I to tell you that cycle mean like this, right? It starts from here and it ends, right? It comes back to the same point. That is what called as cycle. And it is believed that those cycle have been repeating for years and years. I'm not talking only about the stock market. It is also applicable for everything under the universe. I have a small video here. You can see that this is the earth, right? You know that earth rotates around its axis for 24 hours. And that is what we call it as 1 day, right? And once it rotates around its axis for 24 hours, next day, again it starts its cycle. That means again it rotates for 24 hours, and it has been going for years and years. And this is the solar system. You know that in solar system, we have all these planets which are revolving around the sun for many, many years, right? For example, you know that Earth revolves around the sun for 365 days, Mercury revolves around 88 days, Venus revolves around 224 days, Saturn revolves around 30 years, right? This has been cycle. All the planets are revolving around the sun for many, many years, and this cycle has been continuously repeating. We know that we have 3 seasons, that is summer, winter, and rainy season, which has been going for years and years, right? You know that every time summer followed by rainy season followed by winter, and it has been going for many, many years. And that is the another example of cycle where every year you see that weather goes through the cycle. And now you know that why I was showing my daily routine video at the beginning of this video, because I was showing that that is the cycle I follow. Morning 7 o'clock I get up from the bed. From there I follow a routine till 11 o'clock, and next day morning when I get up, I repeat the same cycle. That means that cycle keeps repeating every day, and it is true for everybody. For you also, maybe you get up morning at 6 o'clock and maybe go to bed at 10 o'clock. That means you also have specific cycle. Maybe a little bit different than my cycle, but you also know that you also have a specific cycle which have been following for years, right? So that is what I wanted to show you, that my daily routine video, so that you understand that everything under the universe is governed by cycle. Now, what is the time cycle in stock market trading? The foundation of the time cycle based trading on the belief that patterns tend to repeat themselves over the specific period in stock market also. What is the pattern we are talking about here? We are talking about the pattern is bullish pattern and bearish pattern. If you remember, at the beginning of the cycle, I shown you the example of Adani Enterprises. I shown you the example of TVS Motors. I shown you about the Sun Pharma. That is what the time cycle in stock market. That means every stocks have their own cycle which keeps repeating years after years. These periods of cycle could be influenced by factors like economical data releases, earning report, geopolitical events, holiday seasons, festivals, or even natural human behavior. Okay, we'll discuss about this more as we go into the presentation. And second thing is that time cycle is one of the most important aspect of trading, but time cycle is least talk method in the stock market trading. That is what I said. 99% of traders, they don't know this annual cycle method. Time cycle, maybe few traders know, but this annual cycle method, it was hidden from the traders. So that is what somehow time cycle trading based annual cycle was hidden from retail traders, but not anymore. That means through this video, you know that I'm going to reveal that what is that annual time cycle in stock market trading. What is the objective of this time cycle video? Here in this video, we are going to discuss about the concept of time cycle in stock market trading in a simple way. Why I mentioned it is in a simple way, because there are many time cycle videos, but I have seen that many videos are not getting good engagement from the viewers. And one reason could be they make it very complicated. They don't explain it in a simple way so that even a new traders can understand. Maybe that is the reason where many people have not been aware of time cycle. But in this video, I'm going to discuss it in a very simple way. And here I'm going to discuss in this video 4 types of time cycle, which is normally used in the stock market. By annual time cycle, in this video, we are going to see how predicting possible patterns or trends in stocks based on annual cycle. And also in this video, we are going to discuss about the various example of stocks which made reversal historically on annual cycle days. We have already seen in Adani Enterprises, we have already seen in Sun Pharma, and we are going to see some more in this video. So in this video, we are going to discuss swing trading strategy based on annual cycle, which I said that will be in the second part of this video. And last one is we are going to discuss annual cycle backtested report. As I said earlier, most important of this annual cycle method is the having a backtested report so that you will know which stock have historically stayed bullish or bearish on specific period. Okay, so that is what we are going to discuss in this part 1 and part 2 video. Now comes the concept why time cycle method. I know that many people will have a question mark when I'm discussing this time cycle, because people know me as a price action trader, right? I have made so many videos, I've made so many courses, all based on price action. But why suddenly now time cycle I am discussing here? As a trader, you should be always student of the market, okay? Constantly learning, back testing, and applying the method which works the best and which suits your personality. For example, many people follows indicator, right? Along with the price action, they follow indicator. Many people follow option chain, open interest analysis. But you know that I am not a big fan of indicator. Neither I never use option chain, open interest analysis. What is the reason behind not using it? Because when we learn price action, what we focus mainly based on price action is nothing but price, right? We are focusing on the price. So if I start applying indicators, what I'm doing? I'm doing the same thing, right? Because indicator is nothing but derivative of the price. So what is the point of again having a indicator when I already know the price action? Then what about the open interest analysis option chain, open interest analysis option chain? They are nothing but derivative of the price only, right? So that is what it flashed my mind that I read about time cycle earlier. Now I should do more research, and that is how 6 to 8 months back I started doing research and back testing, and that is how now I came here so that I can share this knowledge to more and more people. And when I done the back testing and I seen how nicely it can work, and I decided it should be at least revealed to my students and my followers. In trading, no strategy works 100% of the time. All strategy are probability. Suppose you have a strategy which is giving you 60% win rate. Okay, assume that you have a price action strategy which has around 60% win rate. Your objective is to increase that win rate from the current 60% to higher. Okay, it's never about focusing on 100%. So that is what novice traders, they focus on looking for a strategy which works 100% of the time, and they never find it, and they keep changing strategy to strategy. But being a trader, you should know that there is no strategy which works 100% of the time. Suppose you have around 60%, for example, then objective is to 60% how you can increase it. That is the objective. If I match time along with the price, then I have a edge, because time is nothing to do with price. Price is nothing to do with time, right? So both are different, right? So that is how I decided to add time cycle method to my price action method. Okay. So by adding time cycle to price action, it could help in increasing the win rate because now you have both price and time information on your side before deciding to go long or short. Though time cycle is very powerful method, but just like price action, time cycle also probability. Time cycle is not a holy grail. So keep that in mind. Okay, now before I start with the next slide, I want to show you a video. I'm sure many of you already know who is this gentleman is. And he is Jim Simons, one of the most successful trader and investor. So let us see actually what he says about his style of trading method.
So can we take a look at this? Because I mean, here's a typical like graph of some commodity or whatever. I mean, I look at that and I say that's just a random up and down walk, maybe a slight upward trend over that whole period of time. How on earth could you look at that and see something that wasn't just random?
It turns out in the old days, and this is kind of a graph from the old days, commodities or currencies had a tendency to trend. Not necessarily the very light trend you see here, but trending in periods. And if you decided, okay, I'm going to predict today by the average move in the past 20 days, there's 20 days, maybe that would be a good prediction and I'd make some money. And in fact, years ago, such a system would work. Not beautifully, but it would work. So you'd make money, you'd lose money, you'd make money, but this is a year's worth of days. And you'd make a little money during that period. But it's a very vestigial system.
So you would test a bunch of different sort of lengths of trends and time and see whether, for example, a 10-day trend or a 15-day trend was predictive of what happened next.
Sure. You would try all those things and see what worked best. But the trend following would have been great in the 60s, and it was sort of okay in the 70s. By the 80s, it wasn't such a.
It didn't because everyone could.
Yeah, a lot of people
did. So what happened? So how did you stay ahead of the pack?
Well, we stayed ahead of the pack by finding other approaches.
Okay, you can see from this video is that Jim Simons says that following the trend and all would work 60s, 70s, 80s, but not anymore. That is what he said. Stocks have tendency to follow the short period of the trend. And when he was asked how he stayed ahead of the pack, he said he follows different approaches. So he did not exactly reveal that he follows the time cycle, but it is believed in trading community that Jim Simons, one of the reason for his success is he is the trader and investor who mastered the time cycle. So this video is there on YouTube if anybody want to watch it, and you can see the full entry. So now let us say what actually time cycle conventional method, but I don't use this method. This is just for your understanding how many people follow the time cycle. So for example, you can see that this is the time cycle curve. Okay, time cycle curve. Nothing to do with price action here. Only we are discussing about the time. Okay, you can see this curve. Every curve is 30 days difference. That means from this curve and this curve, all these are 30 days difference. From this beginning to end is 30 days. So what conventional method they follow that? They say that whenever price comes to the bottom of the curve, that is the beginning of the cycle. When it reaches the peak of the curve and when curves ends, their next cycle starts. Okay, like that. This is the one cycle. This is the second cycle. This is the third, fourth. That is how cycle forms in the market. That means one of the conventional method of using cycle is going long on the swings where curve is starting and booking the profit when curve goes the peak. That is the conventional method. I am not using it. I am not going to discuss that in this video. So this is just for your information. Why I don't use it? Because I not seen much of good result when I was doing the back testing. For example, sometimes it can work. For example, you can see that this swing matching with this beginning of the curve, right? This also you can see that somehow it is matching because cycle started from here, but this is the candle where it started going up. Then next curve was here, but you can see that by that time already price reached here, right? It didn't work. Here, yeah, somehow it worked here because that is the swing. Here also it worked, right? Exactly at the swing. But if you look at here, it did not work, right? The cycle started here. but swing happened here, right? So sometimes it can work, sometimes it may not. That is why I'm not a big fan of this conventional method of time cycle. And this kind of conventional method, you can see many videos on YouTube. So what I'm going to discuss is different than this. And if anybody wants to use the time cycle like conventional method, in the trading view, you can see that trading view, if you go to the pattern section, under the patterns tab, you can see this, you can use it. This is the cyclic lines and this is the time cycle. Now we are coming to the most important, that is the 4 types of time cycle. One of the cycle is called Gann cycle. Next is Fibonacci cycle. Next is seasonal cycle. And fourth is annual cycle. Okay, these are the 4 cycles which are very popular. One is Gann cycle. I'm sure most of you know W.D. Gann, right? W.D. Gann was one of the successful trader ever lived. So he was the one who invented Gann cycle. This cycle involves geometrical angles, astronomy, and mathematical calculation to predict the future price movement. So that means it was believed that he used geometrical angles on the chart, he used astronomy, he also does mathematical calculation. It is believed that if Gann theory applied correctly, one can predict the movement of the instrument up to 93% accurately. Gann cycle has almost 93% win rate. But it is also believed that Gann has never revealed his Gann cycle secret fully to the public. Okay, so this is very important. Gann himself has never revealed his secret fully to the public. It is believed that till his death, he never revealed his full secret. So Gann cycle is still a mystery and not aware to most of the traders. But if you go to YouTube, you see hundreds, thousands of videos on Gann cycle, Gann method, because people know that anything you mention as a Gann cycle or a Gann method, people get attracted to it. Though he has written some books, but he has not revealed all secret in that. Just basic kind of things he had discussed. And those books also very complicated for a general public to understand. Next is Fibonacci cycle. This is the cycle. Many people know that, right? These are the 23.6%, 38%, 50, 61%, and these are the percent of Fibonacci cycles. And Fibonacci ratios available freely to public to trading software. You can go through Google, you can find it, YouTube books, and many traders still use it along with price action for better entry and exit. Third type of the cycle called seasonal cycle. What is the seasonal cycle? Seasonal cycle is some repeatable tendency of financial instrument to move in relation to particular influencing factor. Okay, that could be a specific period of the year, specific year of the decade, during specific festival time, during the holidays related cycles. Some of the very popular in Western countries about these cycles is January effect. The January effect is a seasonal trading strategy that suggests buying stocks in last week of December and holding them for midterm. This strategy based on historical data shows that first couple of months of the year tend to be positive for stocks. But remember, this is in the Western countries, not in the Indian market. Okay. Another one popular is sell in May and go away. That is also popular in Western countries. But I have seen that in Indian market, May, mid-month to end of the month, most of the time it's bullish, not a bearish. But in Western countries, they have something called sell in May and go away, which suggests that selling stocks in May and buying back in November or December, because stock market tend to perform poor during summer months. Okay, not again for Indian market. And next is Santa Claus rally. Santa Claus rally is a seasonal trading strategy that suggests buying stock just a few days before Christmas holidays. This strategy based on the historical data shows stock market tend to perform well during that time. This one I have seen even working in Indian market also. Okay, even Indian market I have seen just before the Christmas and till the Christmas ends or first week of January, market most of the time, not every time, stays bullish. Okay, for example, I've taken the last 4 years data of Santa Claus rally, Christmas rally. This is the Nifty daily time frame chart. You can see that's just before the Christmas on 25th, like 22nd or 23rd, like that, going long. Then you can see that most of the time market rallies. You can see that in year 2020, market rallied during that. This is the 2021. Even though overall market trend was bearish, still it rallied. Here, trend in itself was bullish, right? Here you can see that even trend was bearish, but it made a bullish move during the Christmas. Here you can see that trend itself bullish, and again, near the Christmas time, market rallied. So what it all shows that It all shows that this Christmas rally or Santa Claus rally, which is applicable in Indian market also. I don't know about the 2024 because when I was recording this in June 2024, right? So still we have not having December, but this year we have to see whether it worked or no. Next comes the most important as well as one which we are going to discuss in this video. Okay, that is annual cycle. We have discussed about the what is Gann cycle. We discussed what is the Fibonacci cycle, what is the seasonal cycle, and now we are coming to the most important fourth one, that is annual cycle. Now we have to pay attention here because from here we are going to discuss about our method, that is the new trading system, that is time cycle based on annual cycle. Okay, when we say that annual cycle have a specific pattern, that means remember there are only two cycles. Okay, that means up cycle and down cycle. Don't think that there are so many patterns. No, only two patterns. That means up cycle mean bullish, down cycle means bearish. How in price action we say that, oh, from here it is looks bullish, from here it looks bearish. So how we use in the price action, we use up cycle and down cycle. That is the terminology we use. Up cycle mean bullish, down cycle mean bearish. There are two types of annual cycle. One is based on specific calendar days of the year. You have seen that I have said March 29 to March 31st, Adani Enterprises stock stayed bullish for last 10 years. That is based on specific calendar days. What is the next type? That is the specific number of bars or number of days. Okay, that means, for example, stock XYZ have a cycle of 25 bars. What it means by? It means by 1 bar is 1 day, right? So that means, for example, I have drawn around 25 bars here. I don't know, 25 or 24. For example, when a stock has a cycle of 25 bars, okay, that means from this bar you have to count 25. That means it will complete one cycle. Once the 25 bars is complete, next cycle it will start again. That is what the conventional method. It could be 25 bars or 25 days. 25 days mean, okay, 25 bars mean you have to see only bars, that mean candlestick on the chart. But as I said, I'm not discussing this method in this video. What we are going to discuss in today's video, that is what my system is based on specific calendar days of the year. Okay, that means I have already discussed about some stocks example earlier. Here also there are two types again. Two types are long-term annual cycle and short-term annual cycle. What is the long-term cycle? Lasts around 10 to 30 days. For example, if I say that May 15 to May 30th, some stock have a bullish cycle, up cycle, that means 15 days, right? That falls under long-term. Now, if I say that Adani Enterprises, which I said, March 29 to 31st, how many days? 3 days cycle, right? So it falls under short-term annual cycle. So that is what 2 to 4 days mean short-term and 10 to 30 days mean long-term cycle. 10 mean average. Okay, it is even 7-8 days also we consider as a long-term cycle, just for your understanding. Because as we go through this presentation, when I show you the chart, I'm going to use this word long-term annual cycle, short-term annual cycle. Long-term annual cycle is more ideal for swing traders. Long-term swing traders who hold stocks for say 10 days, 15 days, 1 month, who want to trade in options or swing trading, positional, whatever, 10 to 30 days. But short-term annual cycle, actually, it is also for short-term swing traders who want to hold it only 1 or 2 days, or BTST, buy today, sell tomorrow, or even day traders also. It is ideal method. Okay. How it is day trading? Day trading is only for 1 day. How it is for 2 to 4 days, day traders can use it. That I might discuss when we go to the strategy. Okay. So that is what we are going to discuss about long-term and short-term annual cycle. Okay, you know that we already discussed about this, right? Long-term annual cycle. I have already shown you TVS Motors example earlier, right? 6th October to 5th November, 9 out of last 10 years, it stayed bullish. That is the long-term annual cycle. And next example is long-term annual cycle Sun Pharma. That is also I discussed, right? 12th April to 12th May, 8 out of 10 years. That falls under long-term annual cycle. Now you should know that long-term, this annual based time cycle is applicable for all the instruments, whether it's stocks, indices, also in commodities like gold, copper, silver, or crude oil. Whatever you take commodities, it is applicable, okay? But patterns and days can be different for every instrument. For last 5 years, 2020 to 2024, historical data says most of the time gold commodity stayed bullish during mid-March to mid-April. While backtesting, it was observed that gold stayed bullish from 15 March to 15th April, 5 out of 5 last 5 years. So that means 2020 to 2024. For example, this is the table I have made in gold. You can see that 2020 it was bullish, 21 it is bullish, 22, 23, and even this year 24th also it stayed bullish. As I said, falls on Saturday or Sunday, we'll take the next day. That is why we have taken 16th March instead of 15th March. Here also, instead of 15th April, we have taken 14th April because maybe it was a Saturday or Sunday. For example, this is the gold, 16th March to 15th April. You can clearly see that this is where it started rallying for next 1 month, right, in 2020. 2021 also it rallied during the same period. 2022, not a big rally, but still it stayed bullish, right? Next is 2023, it stayed bullish. And this year, 15th March to 15th April also, it stayed bullish, all right? So you can see that it is not only applicable to stock or indices, it is also applicable for the commodities also. Okay, now let us see one more example on short-term annual cycle. Short-term means what I said, short-term means for 2 to 4 days. So Asian Paints stayed 23rd to 25th for last 10 years, 8 times out of 10 times. So that means it stayed bearish in year 2015, 2016, 17, 18, 19. You can say that, see that it stayed flat. 2020 bearish, 21 again flat, and 2022 it stayed bearish. 23, 2023, 2024 it stayed bearish. 8 out of 10 times, right? So this is the Asian Paints in year 2015. For example, 23rd to 25th February. What is the open of 23rd February? This is the open and close, right? You can clearly see that from open of the cycle to close of the cycle, it stayed bearish. Here you can see that Asian Paints, 23rd February, it started going up, even though it was a bearish cycle. But when cycle ended, where it closed? It closed below the open of this candle, right? It closed below the open of the candle. That means this cycle worked. So that's why there are some strategies in the time cycle also. It's not blindly buying on beginning of the cycle and selling on the closing of the cycle if it is bullish, or if it is bearish, then selling first, then buying later. No, there is some strategies. Let us look at this 23rd to 27th February, because 25th, 26th, maybe it was a Saturday, Sunday. Here what happened? Here this candle opened, next day candle closed, right? Here also open to close is bearish. That means this cycle worked. 2018, you can see that 2018 candle opened here. 26th February it closed here. It is still a bearish. 2019, you can see that it was a flat, right? It didn't work. It was a flat. Open and close almost at the same level. That means it didn't work on 2019. 2020 it worked, right? 2020 it worked because this is the open, this is the close. If you look at the open and close, it stayed below it. Here 2021, again it is flat, right? Open and close at the same price. So it was a flat, it didn't work. But you can see that 2022 it worked nicely, right? It was a open here when cycle began. When cycle ended, it was a close here, giving a big move, and this cycle worked in 2022. In 2023 also you can see that this worked. This is the open, this is the close price. And what about 2024? Again it worked very nicely, right? It opened here on 23rd February, on 26th February, candle closed here, made a big bearish structure. Okay, now we'll come to the last slide of this part 1 video. Remaining strategy, backtesting report and all we'll discuss in the part 2 video. What is the difference between the price action and time cycle? Price action is most commonly used trading method, right? There are so many videos available on YouTube. Even I made so many videos on YouTube on price action. It is commonly used among traders. But time cycle is less commonly used because there are no much videos, no much information on Google or YouTube for the time cycle. Most of the traders have knowledge of the price action method because so many videos, books and all available on the price action. That's why many people have the knowledge of price action, but very few traders knows annual time cycle method, maybe less than 1% of trading community. Price action method working for ages and can work even in future. Price action is something support, resistance, supply, demand, support, breakout, breakdown, everything. You know that it has been there for ages, for many years, and it can work even for next 100 years. No doubt about that, because price action is pure psychology behind the buyers and sellers. But time cycle has a limitation. That means, for example, Adani Enterprises, I said March 29 to March 31st, 10 years it worked, but there is no guarantee that it will work for next 10 years. So that is what time cycle has limitation. After few years, it can change its cycle. Time cycle movement can be zigzag. This is what you have to remember. So that means, you know that price is going there, okay, price is going upside, and then there is a resistance here, all right? When there is a resistance, it can, three things can happen. It can break out, it can make a breakout and it can go up, or it can take a resistance and it can go down, or it can make a fake breakout. That means it can go up and then it can reverse and it can make a fake breakout. That is in price action. In time cycle, price movement is not smooth. Okay, for example, if this is the beginning of cycle, this is the end of the cycle. Assume that it is a maybe January 15 to January 30th. Suppose it's a bullish cycle, closing date price will be higher than open date price, then it will not go every time like this, just because it's a up cycle. Okay, it can go like this, it can go like this, it can go like this, and then suddenly some middle of the cycle, suddenly it can go like this. Has it worked? Yes. When the cycle begins, look at the open price, and cycle ended, look at the close price. That is what I mean to say zigzag. Next one is any strategy can be applied in price action. Like you can trade in futures, you can trade in option buying, you can trade in option selling, or you can trade in credit spread or debit spread, because you know that price action movement is smooth, right? If you have taken a long position, either it can go up or it can go down. If it goes down, you have your stop loss. If it goes up, you have your profit target. But in time cycle, I said movement is zigzag, right? So that is why it is better to go for a spread, because when you're trading with the spread, you don't keep your stop loss, right? So that is why I highly recommend that trade with the spreads. Option buying is fine in selected setup. You have to do the proper position sizing if you want to go for an option buying. Price action is a complex method. In-depth knowledge of candlestick, technical analysis is required, especially for a new traders. It's a complex method, but time cycle is a simple but a tricky method. What I mean by simple? Simple mean you have to just know the beginning of the cycle and you have to know the close date of the cycle, right? Beginning to close date, you should know that when cycle is beginning, when cycle is ending. Yes, it looks simple, but it's tricky. Why it's tricky? One is price movement is not smooth in time cycle. Second is that I said about the short time cycle, especially when there is Saturday, Sunday or holiday comes, many times you get confused. If there is a cycle which is 27 to 29th of January, for example, 27th is some holiday, 28th is Saturday, 29th is Sunday, then you have three back-to-back holidays and time cycle also falls on the same day, then you get confused which one you have to consider. Next is very crowded, lot of information available online. Price action, obviously, lot of information because it's very crowded. That means many traders use this method. Hardly any crowd in time cycle because not much information available online. And finally, this is important. Price action is probability, not certainty. Time cycle also probability, not certainty. That ends the part 1 of this video. And as I said earlier, in the second part, we are going to discuss most important part, that we are going to discuss the back testing report and we see how it works. So that's about today's part 1 video, guys. And in part 2 video, as I said earlier, I'm going to discuss about my backtesting report, both long term and short term annual cycle report, both I have prepared. So second part of the video is going to be the very important video. That is the cream of time cycle you are going to see in the next video. So that's it about today's first part of time cycle series. And let me know in the comment section, how do you find this video? I said 99% traders are not aware about annual cycle method. I said in my social media post that time cycle concept is not new. There are some videos based on time cycle, but actual annual cycle method which I discussed in this video, there is not a single video when I was recording this video. There may be many videos where many people may follow this system after revealing through my YouTube videos, and I can proudly say that I will be the first person in India to launch annual cycle method for traders. Please share this video with your friends so that they also know about the annual cycle method in trading. That's it, guys. I'll see you soon. Until then, bye and take care.